Welcome to Drill Down Earnings. We've got a quick look at the latest results from Snowflake. Ain't no snow here. I'm in Los Angeles. I have seen it snow here, actually, strangely, but not this trip. I'm here in a hotel room giving you the latest business news behind one stock on the move. I'm Futurum Group's Chief Market Strategist, Cory Johnson. Snowflake, important company that helps their customers find and sort and use data from all sorts of sources, put into one single software platform and see what's there. Q2 earnings from them, and they were good. It was a beat, better than Wall Street expected. But I want to dig into the business here, see what this tells us beyond the miss or the beat or whatever. Product revenues in the quarter of $829 million. They're growing revenues with existing customers at 127% net retention rate. They've now got 510 customers paying them more than $1 million a year. And they're well penetrated with 736 of the Forbes Global 2000. I don't know what the Forbes Global 2000 is, but, probably some big companies. I don't know. But their revenue growth is slowing at 29%. It's the worst revenue growth they've ever had, but 29% revenue growth is pretty good. So we'll take that, in the context in which it's important here. But also important, these guys lose a lot of money. They've got negative 42% operating margins, forget gross margins, which are even worse. But they've also got a lot of orders. And the number that jumped out at me in particular was the growth in their RPOs, the remaining performance obligations. So the contracts they're getting are bigger. The contracts they have on their books that they're going to get paid for because they're doing the work, they just can't recognize the revenues yet. So both unrecognized revenues and other billings they've got in there, those numbers are surging at 48%, even while the growth in revenues is not quite as much. So the market didn't love these results. The stock was up 2% after losing 11% in the last year. But I thought there were some promising numbers within here. Also important to note here that these guys are hiring. At a time that a lot of other tech companies and tech companies based in San Francisco, technically these guys are in Bozeman, Montana, but they have a big operation in San Francisco. And they've got 7,630 employees. A year ago, that was only 6,600. So they're really adding employees, growing their business, looking at those RPOs, looking at customers like AT&T and Live Nation and Ticketmaster and LendingTree. Oh yeah, those customers aren't so happy right now because they had their Snowflake accounts breached in a hacking campaign that happened back in May. Great story in Bloomberg about that, which tells the story. But in any case, Snowflake introduced some risks to these customers, and those customers maybe not too thrilled about it. But when the CEO was asked, Sridhar Ramaswamy, was asked, he's kind of new to this company, took over for Frank Slotin, I think 3 quarters ago. And it was interesting to hear him talk about what the customer journey is like, why they come to Snowflake, how they kind of get their foot in the door and start to expand their business as they look at the metrics that really make this business work.
I would say that our customers go through a journey, typically starting with a desire to have a really good data platform that gives visibility. They end up adopting different architectures, but often the enterprise's most pristine, clean data, the gold layer, so to say, is the one that's put into Snowflake. And there are lots of customers that have standardized on Snowflake as that key data backplane. Next, usually, there is a leaning towards collaboration because all companies exist in the context of an ecosystem. They have partners, they have customers, and collaboration of various kinds, certainly starting with data sharing, becomes the key next thing that they adopt broadly. And it obviously also creates a network effect.
All right, so what's this all mean? You drill down earnings takeaway, the one number that tells us a whole lot. I'll have that for you right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So Snowflake just reported second quarter earnings. I'm here in Los Angeles, but I want to tell you what's going on. There's no snow here. As I mentioned, there's no snow here. It's Los Angeles. But there's an essential summary here. We got that. Snowflake reporting an okay quarter for this business. growing fantastically, $829 million in revenues in the quarter, and growing at a 29% clip, which is just fantastic, even though they're losing tons of money. But the most important number to me was the 48% growth in RPOs. That's business that they have yet to put on the books as revenue. So this 29% growth in revenues was okay, but 48% in RPOs shows that bigger contracts and more revenues are coming soon. Thanks for listening to Drill Down Earnings. I'm Cory Johnson. And you can check out all of our Drill Down Earnings reports, of course, right here on YouTube at the 6.5 Media page. But check me out on X. I've got lots more there at Cory TV. And, of course, on Instagram and TikTok at Drill Down Pod.